Hello everyone, welcome back to Financify, where finance is made simple for everyone. Currently, the equity market is at all-time high, Nifty trading at 15,670 level. A question might pop up in your head, is it a good time to buy stocks? After all, nobody wants to deploy their capital right before a crash and then wait years before seeing a return on their investment. We will be discussing about this in detail and we will give you our take on the current rally, which might help you to make a sound investment decision. So stay tuned with us till the end of this video. Almost every one of us wants to buy at the lowest and sell at the highest. However, that is practically impossible to identify such entry and exit points. You will have to be patient to lose some small rallies in the market to enjoy the bigger rally. But our psychology restricts us from entering in the market when it is trading at an all-time high. It often doesn't feel like we are getting the best price. We always think like, isse sasta mein bhi mil sakta hai. That's pretty normal to think, and it becomes very important for us to decode this two important question. Question number 1, is the market going to rise further or is it going to fall? Question number 2, should you be skeptic and wait for the correction or cheer up and invest right away? But before answering the above question, let's first understand the reason why market is expected to continue the rally. Number 1, outlook of foreign and domestic investors. The FIIs and the DIIs have collectively done a net purchase of Rs 6,250 crores in the last 14 trading days, which clearly indicates that they still see further upside in this rally before a correction comes. Number 2, technical indicators. Nifty is currently way above its 20 to 50 days moving average, which indicates that it is currently in bullish trajectory and it may take some time to consolidate. Also, some of the technical indicators like relative strength indicator or RSI, moving average convergence and divergence or MACD indicates a bullish movement. By only looking at RSI, we can say that it is nearing its overbought level. But until RSI crosses 75, we can't be certain about it. Number 3, current market trend. We have not seen a single volume distribution day in Nifty after 12th of May, which indicates that the market is in no mood to settle soon. In addition to this, the government is also preparing an economic stimulus package for the sectors worst affected by COVID-19, which in turn will boost the consumer and retail sectors. Number 4, market sentiments. Presently, many people are hoping markets to correct given its prolonged upward rally. However, do you remember the rally of 2017 when Nifty touched 10,000 level in July 2017 from 8,000 level in the previous year? That's about 25% growth in just 1 year. People were so decisive at that point. They were expecting Nifty to crash after such a bullish rally. Well, market does not move as per people's expectation. In 2017 itself, Nifty gained another 600 points and closed at around 10,600 levels. Now let's understand the factors why market should correct. There's a popular saying by Mr. Warren Buffett, which you must have heard before. Be fearful when others are greedy and greedy when others are fearful. When investors turn greedy on something, the price may unnecessarily start trading at higher levels. Investors will not book profit, don't take exit, buy more and neglect what is the right price of the asset. On any day, if any negative news come, the inflated price would become difficult to sustain and can trigger big sharp fall, which is also known as the bear engulfing candle in the stock market. So when others are too much bullish on something, that may not be a good signal unless there are really some strong reasons to support the prices. Well, the current market mood index by ticker tape suggests that investors are extremely greedy right now, and using this indication, an immediate correction is inevitable. Also, the volatility index or VIX is currently at 16.42 and has reduced by 41% since 12th of May. This clearly indicates that the volatility is very low in the market and one should sell now and buy again only when the market corrects. Now that we have discussed about the factors suggesting markets to increase or decrease, let's try to understand what strategy we should be opting right now. Well, sitting on cash just because the sensex and nifty is setting new highs is a mistake on several levels. Waiting for a market correction to start investing would result in a loss of an opportunity. Firstly, when investing, it is critical to make decisions based on long-term expectation and not short-term market moves. Secondly, past performance is not indicative of future results. Setting new highs does not necessarily mean that the market has peaked and a correction is imminent. So as per our analysis, one should be cautious before taking a short-term position as there might be some immediate correction. But if you are planning to invest for a long term, then you should not worry about small correction as the market is certainly going to breach many such lifetime high levels. There might be a few hiccups, but the general market trajectory is going to be upward looking. In case you're a new investor, this time demands higher level of composure from your end. Instead of placing impulsive bets and repenting later, sit down and formulate an investment strategy. Thank you for watching this video. Give a thumbs up and subscribe to our channel.